Hello, everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity, our broiler chicken show.
Hello, everyone.
All
Welcome
right.
back to
Looks like we're live on YouTube.
the
Also sounds like somebody has the microphone on, so I'm going to help you by muting you. So please don't be insulted if you get muted, but not a bad idea to just throw ourselves on mute. And that way we don't have to battle with volume issues. Anyway, morning, everybody. Happy Sunday. We're now into March. Can you believe that? It's already March of 2019. Final month of Q1 2019. Wow, it's been a crazy quarter, eh? Up and down like a yo-yo. Spring is sprunging. Yeah, indeed. Actually, there's even talk of maybe the cherry blossoms starting to come out here in Vancouver. So that's always nice. Nice time of year. Unfortunately, this is usually a little bit of a tough window for crypto. So, I'm a little concerned actually listening to the amount of chatter online about how bullish the space is and how everything's turned up. And I'm a little worried that, maybe we're setting ourselves up for a new bull market a little bit early. So, but we'll probably talk about that later on a little bit. The level oneers just had their class, so great to see that level oneers are rocking it, and now they're all candlestick aficionados. They did a great module with Grim today, learning about inside bars, outside key reversals, and engulfing bars and fractals, all the fun stuff today. So it's great to see. I have a few questions from the level oneers that I'd like to take a little bit of time here through this broiler chicken show and address some of their questions. So we'll probably start off with that. There was a few questions that I saw that kind of were loose ends that I thought maybe I'd just talk a little bit about. So speaking of which, Casey says the cherry blossoms are already starting to come out in Victoria already. Well, that's good to see. I did see that last week's module for the level oneers was all about fibs, and I did see there were some remaining questions about things like extensions. Probably not a bad idea, and I think I threw together a chart for you guys to try and help you see this concept. Now, where the hell is it? That's always the question. Too many charts. My head's gonna explode. It's one of these damn charts. I thought I had it on here. Let's see. Is it over here? Nope. 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 Maybe it was over here. Here it is. I think this was it. Where did I do that chart? I thought I just had it. There it is. Yay. Oh, it was on OKCoin. I did it. So to the person, I won't pick on you individually, but to the person who asked me to talk a little bit more about extensions, I actually saw a really cool sort of scenario here. And I trade when I was a prop trader, I traded one specific model called the bot quite fairly regularly. It was a fun setup to trade. And what it would look for is it would look for things like market structure, I'm a bear, and then turn into I'm a bull, big old W. Colleen, can you see the W here? I don't know, Colleen, you're here, right? On this sort of event, does this, translate into like a trending market state? And the irony of it all is this could be like a shorter term trending market state within the context of a higher time frame trading range. And, we might even just draw a nice little fib back up to here, boopity boop. And then draw our reload zones, 61.8 to 78.6. So if we were looking at this trading range, we should just naturally think, well, if there's going to be professionals that are going to short this market, this is sort of the area where they're going to start coming alive. And actually, it was really cool. The level 3-ers, Shane, we were talking about this last night. In the video example that I give, I recorded the crude oil DOM one day for the level 3ers because we study the DOM in level 3. And it's so cool to watch the DOM, like the crude oil DOM. As we come into 61.8s, you can literally see on the DOM all the algorithms all start to come to life. In that particular recording that I had for class, it was a bullish 61.8, but it's just fascinating. Like literally, you can actually like literally see the moment when all the algorithms all start springing up, and then they build algorithms to go after other algorithms, so the bots start fighting against each other, and you can see the DOM just going nutso up and down. But for new people to trading, and I see Yo-Yo, you're over there on YouTube. Nice to see that you're consistent in coming to these weekly shows. So hopefully you're getting good value out of this. But for the level 1ers, we just simply say, like if we're in a trading range, where should we expect the market to run into resistance, run into selling? Usually it's up in this area, 61.8. We often put on a little icon, this M, to stand for a guy I used to trade with, Mountain Man. And he used to always hit 61.8s, but 78.6, that's, when it comes to harmonics, this is probably my favorite level, is 78.6, because a lot of harmonic patterns set up off of 78.6 tags. And I like to call it the line in the sand. If we actually, if the market is actually a bear, this is sort of the last ditched level that the bears will try and defend to try and keep this market ranging. And you can sort of see a stab up into here, get your butt back down. And then again here, right, monster battle right on that level, and then get your butt back down. But really what I want you to take away from this course, Colleen, is can you see how if I saw this W here, and I'm thinking, okay, market's pushing up, and we have this big pop. Number one, usually markets never move in just one move. They usually move in 2 stages. So that's that whole concept of the AB equals CD harmonic, right? So stage 1 might be something like that. And the sort of simple rule is that you just clone whatever that pop is and then just project it off of whatever the low is. So do you see how that kind of lines up with 1.618 there? Mr. Exam Man popped in here. Congratulations, Reza. Got better than, I think, 92% on his exam. So I'm feeling confident. Reza is well schooled on our basics. So, all you level 1ers, Reza just did the level 1 exam, got a really nice result. So he is now officially deemed non-newbie. He now knows how to behave in the market. But it was so funny. I was joking earlier. I don't know whether I was recording or not. The one question I figured Rizza would get right, he answered wrong. What's the market cap of Bitcoin? I couldn't believe it. You thought it was volume. Anyway. Anyway, congratulations, sir. You passed the exam. I was rooting for you. And we had a nice little dinner last night. And it was very nice hanging out with Rizza. And we were driving, Rizza was driving his truck across North America while we were eating dinner. All right. Anyway, back to our story, Colleen. Sorry, I got off topic there. But the point here is that I like to, as sort of a way to try to figure out where these sort of, if this is a trending market state and we've had the initial burst off of the W, if we were going to trend continuation our way higher, where should we start thinking about resistance coming into the market? Does that make sense, Colleen? Obviously, everybody watching, you should know who asked this question now. So the point here is, does that make sense? That we can use extension levels to sort of help us see where, okay, if this thing is going to continue chugging its higher, where are we likely to see it start to run into some serious resistance? And that is, what is the 1.618 in math land? Everybody should know this. This is a really, really important number for a lot of people, mathematicians. You know what number that is? B Silver Tree writes the golden ratio. Yeah, the golden ratio. This is a really important level to mathematicians. And the interesting thing, right, is like 1.618, 0.618. That's obviously a really important number that just keeps coming up in sort of sacred geometry, all that kind of talk. Very, very important level to the way our universe works. So if you saw the W come in and you saw a big burst off of those lows, and you're kind of thinking, is this the end? Where's the market likely to run out of steam? If we do break out through the top here, you start projecting, doing your extensions. And in essence, 1.13, 1.272, 1.618, those are fib numbers. 200% is not a fib number. You're never going to find a round number in fib land. It just doesn't exist. So what is that 200%? And the 200% is just simply the principle of the head and shoulders. Remember we were doing this in class with the fractals, where in essence, a head and shoulders, and do you guys remember this from the introduction to markets in transition patterns? Do you remember that, Colleen? And the head and shoulders, and hopefully you look at this and go, oh, gee whiz, that looks like a fractal, right? In essence, a head and shoulders is a fractal is a head and shoulders. And the way that you determine the target on the fractal pattern is just simply take, the old rule is, you take the distance from the head back to the neckline, and then you just simply project that exact same distance off of the neckline if we break out top to give you your target. And gee whiz, if we do our harmonic extensions, that in essence is that 200% extension. So this is 0, 1, just replicate this range, 200%. So as a result, whether it be a fib stall, whether it be an AB equals CD move up into things like 1.618, or whether it be a fractal, a full basically, and actually it's interesting because I was talking about Shane there earlier. Yesterday, when we were exploring the DOM and the way that market makers set levels on the DOM, what you actually see when you look through an order book is you actually see a very structured pattern to order books, where there's like big blocks of whatever it is to buy or sell sitting at very preset levels. And the market, it's weird. The market sort of likes to move in these sort of very structured fashions, where, and this is why I like to call this, for the and actually, you know what? I mean, there's no reason why I can't show you. So where is it? Level 3. We just showed this. This is what we were talking about in class yesterday. It's the best place to show you this. The market actually likes to move in a very sort of stair-steppy fashion. Well, that's not what I wanted. Oh, yeah, I guess it is. Silly Brian. Where are we? Trading with the DOM. And I like to use this analogy. And if you can think of parking garage, that this is the way the market likes to move in this very structured fashion. And I have them all watch the Peter Davies video, right? If you want to sort of get to know how the order book and the DOM operates in this very sort of parking garage fashion, you're actually best to pop into the library. And I'll just post it here just for fun. But a guy that I used to work with at Top Step, Peter Davies, he runs this site called Jigsaw Trading. And all they do is they just trade the DOM, and they're looking for these sort of parking garage notches and all that kind of stuff. So if you want some fun, go and grab that video and watch it to understand how the the guys who trade the DOM look at the market. But in essence, his basic premise is that markets move through these sort of phases. And it's a very sort of stair-steppy fashion, right? And literally the market eats through ceilings, then punches through ceilings, then goes back and tests those ceilings and goes back and forth. But it moves, and it's quite remarkable to watch. But it moves in very structured fashion. And, that whole concept in the level one, actually, I could probably show you that. Question is, do I have that handy? In the level one program, we show you the gold example. Where the hell are we? Week 2. Probably about week 6 or so. Yeah, extensions. Right, we show you the gold market. Right, here is that gold market. And can you see the head and shoulders here, Colleen? Did you get that when you watched this video? See, left shoulder, neckline, head, right shoulder. So this is a trading range, right? Basically, the market, and you can even see the market lost these lows off of this level here and then this level here. So it entered in, it like was in a trading range up here. And think of that sort of very structured pattern. When it loses those lows, odds are it's going to actually replicate this range down below. And that's pretty much what this thing did. It missed the bottom of the range just by a smidge. And then, of course, on the other side, okay, I don't want to be in this range anymore. I really want to go back into this range. So the whole process of forming the inverted head and shoulders, if it accepts above the neckline, well, our target has to be basically a replication of this range up here. And that's basically what, 0, 100. So a replication of that range is 200. Does that make sense? So the bottom line here is that, are we talking about fib levels, golden ratio, AB equals CD, harmonic objectives? Or are we talking about just simply a range that's been established and then an acceptance? We don't want to be in this range anymore. So does it just simply replicate that range to the upside? In this case, breaking up through the neckline, it just literally replicates that exact same range to the upside. And that's that conversation that I just was talking about here with the parking garage. And that's kind of why I labeled this thing the parking garage. And, I'll give a shout out to Peter Davies. He was the one who basically, we used to call it when there was there was one coin, Dash, during that nutso bull market in crypto a couple years ago, where this one coin Dash just literally just kept going higher and higher and higher. And the only way you could really logically explain it was if you sort of thought about that. We're just simply replicating ranges higher and higher and higher. And that was this. And anybody who remembers back in the day, these, in nutso bull markets, literally all we did was we just simply said, okay, let's replicate trading ranges. And hopefully what you see here is this is nothing more than a trading range, right? When, the story starts, there's the bottom end of the range, right? And here's the 100%. This was the top end of the range. So if we're going to, a trading range, back and forth, trading range. If we're going to accept above the trading range, then where are we likely to go, right? So, on a break of these highs, you can start drawing your extension levels. And interesting to see, you can even see the first push. See that first push right there? It was a pretty nice rally, eh? That push right into that level there. Yeah, that just so happened to be just, looks like it was right comfortably into that parking garage. Right there, right? So again, if we had broken out of this range, where is it likely to head up to? Having this level on your charts gives you a pretty good idea of what's going on here. Why would the market stop where it did right there? Good old 1.618. Yeah, we used to call this like Amanda's department store. And at the very top of the department store was Amanda's penthouse. And I wonder where Amanda is these days. But we used to, you can, that sort of picture that I showed you earlier of the market sort of, as a parking garage and eating through levels. We can actually just go on here and put on, we can even just get rid of the fib levels. And if you just want to think parking garage, you can put on 300%, 400%, right? And you can literally see the market's sort of stair-stepping its way higher, right? So it got up to the fourth sort of extension level and then finally exhausted. And I often see that happen quite a bit. Markets will do sort of these fourfold increases and then just crap out. So hopefully that helps you, Colleen. Do you think you understand extension levels and why we draw them? Good. And just for the level 1 program, we don't necessarily need to get into 300, 400% extensions, all that. But just for the level 1 program, I really want you to understand fib levels with the idea of AB equals CDs, right? Because quite often what ends up happening with these AB equals CDs is the market will actually stall out right at a fib level. And my hunch is if we draw that off of there, that probably is right up against 113. Can you see how 113 right there is basically right at that level? So if you put on your charts and you start drawing these AB equals CDs, what I want you thinking is, do these AB equals CDs line up with any of these fib extension levels? Because they often do. And then, as I was showing off of the Bitcoin chart, what I really want to see from you guys in the level 1 program is I want to see you guys playing connect the dots, where you go, let's just get rid of all this nonsense. Where you go, okay, I've got a range, right? Here's my range. Top end of the range, bottom end of the range. I draw my reload zones. So I am, markets range 70, 80% of the time. So there's pretty good odds that if the market gets up into this area, we're probably going to run into resistance. And then what I want you to do is I want you to, sort of zoom in on that bigger range and just simply ask yourself, is the market telling us? Is it giving us any sort of hints of how it's going to get up into that reload short zone? And here we see that, yes, there was a nice W. We see a big burst off of the lows. We see a consolidation. And if we draw an extension level off of this range, then our parking garage is up in this area. In this case, we went beyond the parking garage. It happens. But what I want you thinking here is that this is the end of the move, not the beginning of the move. Does that make sense, Colleen? When we get up into extension levels, you got to think, okay, this move is getting old. Maybe this market needs to calm down a little bit. And yeah, the sad thing is the pros are all sort of taking profits and all this. And who do you think's coming in and buying this move up here? This is the sad part about it, right? This is the tragedy of capitalism. Did she have? She has multiple boyfriends? I didn't know that. So, but the point here is, I want, and this is super important, Colleen, I need for you, when you see this in the future, you need to recognize what's going on up here and just simply say, you know what, the odds of me actually going long up here and making money is actually getting pretty thin. Now, the worst part about this, and this is what I'm really fearful of here in the crypto space right now, is been watching lots of sort of YouTube videos with old students and stuff. And, on balance, I can see the argument because if we go, this happens to be the OK coin forwards contracts, adjust your levels accordingly. But we do have basically a trading range here, and you can see that these highs were broken. So we could, on balance, draw extension levels above there. And there is, I have heard some people saying that they're looking for a nice rally. There's our golden ratio up there, at, on OK Coin here, 48.32. I think there was like 4,900 reference by some people on a move up into this golden ratio level. It's definitely doable. It wouldn't shock me, but I'm really worried that number one, this was kind of just a straight move up here. I really like back and forth. I like nice, this W type action to sort of tell you that there's a base. And I'm a little worried because kind of like our conversation about this AB equals CD kind of move, no moves ever really happen just on their own out of nowhere. Usually what ends up happening is the market moves in this sort of two-step fashion. Sometimes you even get three steps, like three drive patterns. And sort of like here, one move and then the second move. I suppose you could even say like one move and second move, but that's not really the best example. I was getting exhausted. There's tons of them up top here. You could argue one move, then the second move. Here, one move, then the second move. There's that third move that I talked about. So very rare, and here, one move, consolidation, then the second move. Very rarely do you ever see the market actually move one direction, and that's just it. So when I saw this initial sort of dump straight down, my knee-jerk reaction is, okay, well, this is the first part of the move. And if we do sort of AB equals CDs, AB, CD. Oh, gee whiz, there's our buddy 1.618 again. You see how that's sort of lining up there? 1.618, the top of the parking garage. I don't know whether we're going to completely replicate this range to the downside to hit that 200%, but I'm just a little bit worried here that the market has been sort of lulled into sort of a false sense of complacency. Everybody's said the bottom is in. And I still, and like before I hit the record button here today, for the hangout, I was playing the Viva Las Vegas song by Elvis. And of course, I'm a terrible singer, so it probably sounded terrible. But anyway, so the point that I would just make is that I still really firmly believe that we're in that chop Vegas. I was looking for that chart. Where the hell is it? Here. I still firmly believe that we're in this chop Vegas type market. And you'll notice, right, they had like little fits and starts. Then the market came right back against the lows, put in like little polite W's, ran up. Oh, I'm a bull. No, you're not. Get the fuck out. Right. And then put in other W's. Now I'm a bull. Okay. Yeah, I am a bull. And the weekly W's are confirmed and away we go. So I'm a little bit worried that we're, I'm hearing lots and lots of the bottom is in kind of talk. And whenever you hear a whole bunch of people all saying that the bottom's in, it's almost like that's setting us up for disaster. I'm also a little worried too. So, that sort of helps that, just to finish Colleen's sort of tutorial here, that sort of helps me thinking that if we do crap out here, notice like 200% would take us right down, basically right back down to those bottom. And this is what bothers me about this low, is that technically this is like a V bottom. And we don't really like V bottoms. Really what we want to see is we want to see a nice W. Maybe what that means is that, right? Massive W. I don't know. I mean, nobody does. Anybody who says they know exactly what's going to happen in the future, you know what I think about that kind of talk. So, you know, and then, we look on the lower time frames and, first and foremost, now we've got another megaphone working in the market, which is a pain in the butt to trade anyway. So more sort of chop Vegas kind of talk. And now I actually have like bearish bot setups that could actually fire here on a loss of 38.57 here over on Phoenix. One high, two highs, three highs. And what was interesting about this setup here is the market never did get back to 33%. So technically the bot really shouldn't have come alive. And actually, I remember Alex B sort of, how do we say this? Reminded the instructor, because I was like blabbing about a bot that went beyond 66. And he's like, well, didn't that go beyond 66? So doesn't that technically mean that it's off the table? And so since and that reminder constantly pops up in my head of late, and it's good. And that's right. That's no. If anything, Alex, that's good. That is. I mean, the irony of this business, right, is you got to keep yourself honest, and you got to do what you're going to say, right? If the setup says this, then don't go and fuck around with it. So, if anything, I appreciate that, Alex. I need more of that kind of talk in my life. And I used to say, the absolute best trading I ever did when I was trading at that prop firm was when I had a trading partner and I wasn't just out on my own on an island. And my partner, Matt, I haven't talked to him in years. He and I literally every single morning would review levels and just keep ourselves honest. Are you doing this right? Are you doing this wrong? Is this part of your trading plan? Are you sure you're following your plan, Mr. Beamish? So I like that, Alex. I love that kind of talk. That's solid. So anyway, the point of the matter here is there's a debate as to whether this bot actually did come alive, but then and lots of chop Vegas, big old dump, then quick rally back, bust the highs. I think we could say now that 0 to this AB now all the way down to this level, and then the dead cat bounce off of that level, it has done the required 33%. That would be that level there. So that has validated. And now what I like to look for is one high, two highs, three highs, and hopefully you can kind of see all the sort of Emmy action that's coming in off of here. So, put it all together. I don't really have a problem whatsoever if people are hunting shorts through this. But keep in mind, too, this is a lower time frame trade. This is like trader's trade. I would argue that for the new people to trading, very difficult stuff. Paper trade the crap out of this, especially in crypto. If you're going to be trading off of things like hourly charts, you're not going to get much sleep. If you do want to sleep, it's probably in your best interest to close your position out before you go to bed. Because notoriously, OKCoin always trips my levels up at about 2 or 3 o'clock in the morning, almost without question. So I don't do a heck of a lot of day trading. And we've got right now, I think I have 4 different school programs all up and running on the site. And I'm feverishly working to try and stay ahead of the curve with one particular automated program that we're building out. So I'm just way, way too swamped to be able to consider not sleeping at night because I've got a day trade going on OKCoin. Having said that, you can see the 3 highs. If I was trading my trading plan and I was day trading, I would actually be remiss if I didn't take this setup. And long and short of it, it's coming in. I suppose the only missing ingredient is, do we have indicator confirmation? I think if I'm not mistaken, we've been carving out bearish divergences in MACD on this move to new highs here. M's and Willie I don't know whether did he actually get stupid. Yeah, he did technically get stupid there. So, you can see the very noticeable M in OBV. And actually, you level oneers, you're just going to start doing this. Really, it looks like all of the camps have fallen asleep here now. And what we really want to see is a bullish or bearish impetus signal from either the bulls or the bears breaking this market out here. Our sort of site co-host that does the show with me, he the daily brief. He actually doesn't even really like trading crypto on the weekend anymore because it becomes this sort of ghost town vacuum type trading. It's not very fluid, and of course, when the boys come back for Chicago and New York for their futures trading, the market picks up quite a bit of activity. So, and I even noticed that yesterday through yesterday's price action. A little algo that I happened to run on the site that I built years ago was spitting up a couple buy signals, and we were looking very uppy, but there just wasn't any activity. I mean, literally the whole market just stopped, and it was weird to watch. Like on Stamp, literally one trade to the next was like $5 wide. It was remarkable. So that, unfortunately, they always say never short a dull market. And man, this feels like a dull market. Tough market to really call direction in here. And now, of course, now that we have megaphones working, I'm always counseling people. Megaphones are a pain in the ass to trade. They are very, very difficult. And my hunch is there's going to be lots more stopwashes and shit down the road. As I'd sort of said earlier, this is total chop Vegas kind of market. So if you are a day trader, lower time frame trader, and for the YouTube audience and Twitter and all that kind of stuff, just be on notice. The bearish bots are alive. And I can make an argument that I'm seeing M's coming in here. We have 3 lower highs. I don't see anything to get too excited about on the bull side for momentum or volume. And I think what I'm also seeing is, I really think that we had sort of a buy the rumor, sell the news event here on Ethereum with this Constantinople. So the Constantinople event, I think it was right here, but I'm not positive. But you can see following that event, basically the whole market is just putting in lower highs and lower lows. We've gone into a bit of a trading range here, and I guess it was good to see this little bit of railroad tracks. Wicks and tails like to be eaten, so you can see there's a big old tail that's just sort of sitting there. And my hunch is actually if we do a fib off of this high back to this low, that this is probably like in the reload zone right in there. So it makes sense why there was a bounce out of there. But the question, I guess, really is what's the fundamental justification for buying now? Do we have anything to look forward to? Oh, so we never even did get down there. And then, so, you put all that together and, that event is over. And that was all through this event here. And then, our ultimate leading indicator, good old Litecoin, is kind of stalled out here, looking a little heavy. So I really don't like the look of all these M's now that M is confirmed here. And I suppose, you could argue, can we do 50? There's a reload zone. Look at that juicy tail down there. There's the line in the sand right against all those levels. Conservatively, I would, for level ones, I suggest that we just look at 50% rules as targets. So I don't know about, Phoenix, whether you trade there or not. But, we just, well, geez, there's a big old M. I'm going to risk against this M. And I got like a few highs to work to defend my trade. And I'm going to use the 50% level as a target. Oh, hello. Hopefully everybody can see. That produces about a 2-to-1 risk-reward ratio. And that's the bread and butter of traders. They want those 2-to-1s. So, this is technically just working away here. And its target would be down here about 46 or so. Well, maybe they can go and break the top here. That'd be great. But I just don't know right now. Looks very difficult. And the thing is, what's the fundamental driver going forward? Here's that Ethereum chart. This is on Phoenix. AB equals CDs, that kind of thinking, right? We can do, for Colleen, we could do a range extension off of there, that entire range. And now that's going to take us right back down to the original bottom. And actually, this is kind of cool. Because in essence, what this is saying is AB equals CDs. Can you see how that lines up nicely with 1.618 there, Colleen? Are you are you sort of getting the hang of how I'm doing this? And that's going to basically imply that we're going to have to come down and test this low in earnest. And if we lose that low, well, there's 200%. That's basically, so if we lose this low, then really what the market's saying is we're probably going to have to go down and test this low, right? Which is basically at 200% right in there. So, market's looking a little heavy right now, And the question I have to ask myself was this a buy the rumor? And then remember on last week's Broiler Chicken show, we went into great detail about the stop run moves, right? The SFU, Sebastian fuck you setup, shorting a break to new highs. Remember, and I seem to remember, Colleen, you were like, oh, that's kind of cool, that concept of how they bid the market up going after these stop loss orders. And then when the stop loss orders are triggered, they're actually taking profits into those stop loss orders. Yeah. So a really good example of that. And then, as soon as that's done, the market just loses its lunch and dumps. Well, welcome to capitalism. And keep in mind, Colleen, this is crypto, right? This is like the most brutal. Colleen, you see what's happened to this silly Canadian crypto market, Quadriga. Turns out the whole thing was a total scam, right? And the guy was a total outright crook. Welcome to crypto. Welcome to capitalism. And this, it really sucks for you guys because you guys, a lot of you are kind of like, we're going to crypto to escape the cronyism. We're going to crypto to break the model of the 1% and the assholes. And the irony of it all is that this is no different than anywhere else. I mean, it's, what we're dealing with here is we're dealing with human beings. And the worst part about this species is that some of these human beings, they just don't care. And it's tragic. I know, it's interesting. We were having dinner with Reza and stuff like that yesterday. And I put forth the sort of concept of, could this species, this human species, be trying to evolve here to the next level? I think we're trying as a species. I really think we're trying to evolve. But man, I see a lot of that, sort of, you call it, I don't know, is it the reptilian part of our brain, that kind of stuff? The Saddam Hussein's, the Adolf Hitler's, the Pol Pot's, all that kind of stuff. There's still a lot of that in our DNA that just don't give a shit about your fellow human. Call me crazy. I'm an idiot. I don't know. Sometimes I even ask myself, how can am I even a human being? Because I look at the world and I see the people that are in charge and how they act with each other. And it makes me ashamed to be part of this human species. But anyway, that's Brian on his crazy pulpit again. Okay, so let's keep moving forward. Hopefully we gave Colleen a really good lesson there but this guy was Canadian. So if anything, what the hell happened to that, right? I don't even know if he is a Canadian, but it was, Quadriga and all that. That's a Canadian story. Just makes us look awful. Anyway. Oh, well. Okay, enough of that. So hopefully we helped Colleen understand extensions a little bit better. And, given the current price action, the question I have to ultimately ask myself is, what's the fundamental driver going forward? And what I'm really worried about here is that we just had the big fundamental event. And now we have a bit of a vacuum. And I don't know whether you guys have seen, but March usually isn't a very kind month to Bitcoin. So, hey, well, good. Boo ha, boo hoo. How do I pronounce your name? Boo hoo hoo 007, whoever you are. Anyway, so he says, me too. I think I'm an alien. I got to tell you, man, sometimes I look at this planet and I honestly think there are actually like different species running around all together. Here we all call ourselves humans because some humans act one way and other humans look at those humans and go, how on earth do you actually do that? It doesn't make any sense. But oh well, it's a crazy world we live in. Okay, so somebody had asked, like I said, somebody had asked me to talk a little bit about extensions, and then somebody had asked to just do a little refresher on the risk reward tool. And really, it's not that difficult. You're probably overthinking it. On sites like TradingView and Coinigy and stuff, they just have a little tool that says long position or short position. We just did the fractal module. So, why don't we take a fractal signal? So, this candle, and this candle make a fractal. So, and the cool part about it for the level oneers, I'm going to have to update the chart. And I hope I don't lose it, but let's see what happens. Survey says, sometimes these things get all screwed up. Well, it looks like we're okay. Try and help you, all you level oneers, see fractals. All you got to do is just type in here on TradingView and on Coinigy and stuff. You just type in fractal. There's the Williams fractal, right? And hopefully you can see all the little fractal signals. So they come in awfully muted. So I actually like to go in and sort of increase the font size and then change the color so it's bolded so you can really see it. All right, so you can see there's a nice fractal up top here. So, maybe this is awesome trade location, whatever. You're thinking, okay, maybe we have divergence come in here. So, okay, all we need is some sort of structure. So in comes the fractal. And so you're just going to go over to your trade tool. And in this particular case, we're going to be hunting a short. So we're going to take our short position tool and literally just plunk it right on the trade signal. The fractal, of course, fires on a fail of this third bar's low, which happened to come in on this bar here. So I've just taken the tool and just plunked it right on that low. And if you want to be very specific, right, you see that low says 152.59 right on this low right here. Right, 152.59. You can go into the trade tool itself and just simply type in here 152. We'll say 58, one tick below the fractal signal. And then, similarly, we're going to risk against the top of the fractal. So that high is 167. Yeah, why don't we give it like a dime or something? So we'll put our stop loss at 167.10. So now we're going to risk to a break of this high up to 167.10. And then, for the level oneers, just it's a good idea. You can use reload zones as targets, but remember, there's no guarantees in any of this shit. The market might come down to reload zone, but it might not. It might come down to 50% level, turn back up. Mr. Gann, and that's where the 50% rule really comes in. Mr. Gann postulated that, because of sort of natural forces, markets are very, very high probability of retracing 50% of their previous moves. It's sort of like one of the sort of unwritten laws of Toyland is markets love to retrace 50% of their previous move. So I would encourage all new people to trading to try and use the 50% level as a profit objective. It just keeps you honest. You can shoot for 61.8, but it doesn't have to happen. And quite often, markets don't. So 50% rule is just nice conservative. And according to Mr. Gann, very, very high probability that market will hit that. And so, I think it was somebody in the level 1 course class, and maybe it was even asked here, asked if I could just review how to do that trade metric tool. It's just that simple. You just, you come up with your trade reason, you come up with your levels, you come up with, your fractals, your divergences. Maybe this is, like we said, some sort of, fib level. Maybe it's a 38.2 or something. AB equals CD target, whatever. I'm not talking about a trade setup here. All I'm talking about is somebody asked me, Brian, can you go through how you actually use this trade metric tool? And you can see that produces a 1.9 risk reward. I don't have a problem if, you did all your math and then the whole setup came up and you're like, well, Brian, it comes to 1.9 risk reward. Is that acceptable? Perfectly fine by me. I think it's a good idea for new people to trading to just get into the habit of, if the trade doesn't produce about a 2-to-1 risk reward, then it's just not worth your effort. And I see a lot of people new to trading get sucked into the trap of wanting and having and needing to be right, that they'll be happy with booking like a 0.5-to-1 risk reward. But what ends up happening is, we're never going to be right 100% of the time. It just doesn't happen, guys. So, but what ends up happening is, your need to be right, anxiety, just take the damn profit. Look at, I'm right. Look, I won. Woohoo, yeah. I booked my 0.5-to-1 risk reward. So what ends up happening if you fall down this trap, and I've seen people fall down this trap many, many times, is you end up booking a whole bunch of sort of little winners. And, maybe you do it 5 times in a row. Well, let's say 5, and you've got 4 out of 5 right, which is awesome. But then you have one loser that runs away from you. And that one loser, and maybe it's like that one loser actually ends up, in this scenario, you're right 80% of the time. And of course, on CNBC and stuff, they're all like, well, man, you're so smart, 80% accuracy, 80+% accuracy. But the irony of it all is if you add up all of these boxes of your wins, it doesn't actually even equate to that one loss, and you're actually losing money. I've seen it happen a bazillion times. And literally, I had to, I used to have, as a broker, I used to have to pull teeth to get this because, of course, as a broker, it's not your money, it's the client's money. And ultimately, at the end of the day, they make the decision. At least with my students, you have to do what I say or get the fuck out of the school program and don't come back. And that's fine. I don't care. Don't come back. It's no big deal to me. You want to learn how to win at this game, you have to reverse this. This has to change. And you have to change it into, maybe I'm only right 3 times out of 10, or 3 times out of 5, right? So my accuracy is now has gone down to like 60 some odd percent. But in this scenario, because my average winner is bigger than my average loser, my percentage accuracy has gone way down. And, in the public, they're going to go, well, fuck, you're wrong like 40-50% of the time. Why the fuck would I listen to you? But at the end of the day, if I stack up all my winners versus my losers, am I profitable? That's the trick to this game, people. I literally go through this almost every single Broiler Chicken show. And I don't know whether anybody's listening to me, but I'm telling you, this is the secret sauce. It's just that simple. So lose the need to be right. It's okay to be wrong. But when you are right, Colleen, what has to happen? Let's see if she can remember. When you are right, what has to happen? Hey, Brian, I paid for a level 1 a month ago and haven't heard anything from TRI. Wow, that's surprising. Troy, really? You gonna send an email to admin@therationalinvestor.co? I think that's our Gmail address. That sounds a little bit odd. In fact, actually, you know what? I'm going to. I don't know. Can you? Are you on the website right now, Troy? I mean, we haven't started a new level 1 program. Maybe you're just in the queue for can't hear. Oh, geez. Somebody cut me off on YouTube. Am I even still existing on YouTube? Anyway, I don't know whether we're recording. Can you guys in the lounge hear me? Yeah, you can. All right. So YouTubers, you can't hear me anymore? But anyway, I will. You can see on the screen. I just grabbed that that comment there, Troy, and I'm going to post that in our team room meeting. That's something's not right. Something's disconnected. When you're right, we need to take profit. Well, Oscar, more importantly, when you're right, you got to get paid. You gots to get paid. That's this whole sort of, banging out doubles kind of idea. The nanny nibbles strategy, which somebody, I won't go there today. Anyway, nanny nibbles, right? We just take small bets, and when they pop and they pop hard and they double, get yourself a free position, pay yourself. All right. Okay, so hopefully I gave a nice little demonstration of extensions, and hopefully I gave a nice little example of using the trade metric tool, right? You can even do this W, right? I'm going to buy this W because I think this thing's a W. So that high right there, right? You can see it says 34, 63, 69. So boom, I bought it at 34, 63, 69, right? You can even go on here and just go settings. And 34, oh, no, not 73, 63. What did I say that number was? 34, 63, 69. And I'm going to risk against the bottom of the W. So that means I'm going to risk against there. 32.90. So let's go 32.89.50. 32.89.50. So that sets my entry off of the W. There's my stop loss against the bottom end of the range. And ideally, I want to get a 2-to-1 risk reward. So that means I really want to shoot for at least somewhere in that area there. And the good part about it is we could probably do a fib going from there up to there. Oh, look at that. Isn't that incredible when you see that? Colleen, can you see that? Literally, I eyeballed that. I want a 2-to-1 risk reward, and it's basically right off that 50% level. Isn't that incredible? I don't know whether anybody can see that or not. But, and this is often why I say that a lot of these trades sure feel like they are manufactured. This, to me, when I look at this to me looks like it was a manufactured trade. So at this point here, you're going to get a big pop. And of course, remember, parking garage, we want to be taking profits up here anyway. So you should have gone, if you bought the double bottom, at the very least, I want you selling at like partial profits, take some profits, maybe move your stop to scratch on the remaining. That's a little bit more advanced. I don't really get into sort of, trade management and giving you the discretion to make decisions on the fly about stops until like level 3 in reality. But at the very least, you should have been taking a big old whack of partial profits there. And then, if I'm not mistaken, I think we had bullish bots set up through here. So those guys hit their 3-to-1s up in here. So, yeah, not a big surprise. So, as it stands right now, I'm a little bit concerned that maybe the space has gotten a little too bullish. I'm also a little concerned that, March historically doesn't really favor Bitcoin too well. And I don't really have anything, like sort of like the bottom W's, that trade's already come and gone. And we had just a beautiful trade window there. There was about 2 or 3 setups that developed, that played out. We came up against the top end of ranges. Unfortunately, the public, of course, got all bullish up top here. Terrible timing. They got bitch slapped. And now the market just feels like we're back into sort of that chop Vegas mode. And until we really can clean through these levels in earnest, especially this old high up here, it's tough for me to really be too aggressively bullish here. I got to be honest with you guys. Right? A little worried that because this was a new high, we actually might be carving out a new bearish divergence on MACD. Yuck, we don't like to see that. Do we have any sort of cause to be bullish out of our oscillators right now? Never did get stupid, so that's good. But you can see we're in the bear mode now. Things are pointing down, so there are no W's here for us to work with. So there really isn't any great hurry here. Unfortunately, if you're a bull, I think you just got to let this thing develop a bit more. There just isn't anything to do right now. And if you're like a day trader, lower time frame trader, like I had said earlier, ironically enough, if I'm hunting anything right now, I'm hunting short setups, not long setups, which kind of sucks. And it's interesting, because about maybe a couple months ago or a month or two ago, the community was extremely bearish, right? Back in this market, the market was very, very bearish, and everybody and their brother that I talked to and listened to on YouTube and stuff were like, I'm short, this thing's going into the ground. And it just felt like we were ripe for a big fuck you. So that's basically what I think that was the trade was way too heavily tilted to the short side. I'm sorry if I'm dropping F-bombs. And it just felt like the market was just a little bit too. The trade in the trade, they call this, the trade was too crowded. It was just everybody and their brother was short. The irony of it all is I don't actually think a heck of a lot has changed here. It's just that we needed to clean out a lot of those shorts. And what I actually noticed, like I said, is I'm hearing a lot of people saying, that's it, the bottom's in, we go straight up from here. And I don't think we're in that kind of market either. This is Viva Chop Vegas. Viva Chop Vegas. So enjoy the ride. And of course, I'm probably going to lose followers and people are going to downvote the video because of this and all that. But hey, I'm just calling it as I see it. Okay, so that's basically the Bitcoin rant. I won't spend too much time, but we'll just simply go through this Twitter feed to see, if there's anything in particular that really should be mentioned. Where are we here? How long ago was that? When was the last time we did one of these? It was Sunday the 24th. Oh, there we are. Okay. So coming out of this, really interesting. I really like this guy, Benjamin Blunt's. Really good analysis. And you can even see this guy here was kind of like, oh boy, get ready. This thing's going to be more choppy, 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 chop. And I think this is the kind of environment that we're in. I mean, very advanced, lots of, I guess Elliott wave counts and all that kind of stuff. But this is kind of what I'm thinking the environment's going to be like for the next little while. So just be prepared, okay, guys? Nice work, Mr. Benjamin Blunt. I really like that tweet. The silly platinum and palladium market are going absolutely crazy. And I'm a big fan of investing in junior penny stocks that have been cleaned up, rolled back, options to directors, shares for debt, blah, 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 blah. And this happens to be a company that's in the cobalt industry, and cobalt's really popular right now as sort of one of those rare earths. So that's a tweet about that. And my VCIM model got me into this into the end of the year. So I'm feeling pretty good about that. But holy crap, like later on, I'll show you like North American Palladium. Man, I'm pissed off. I missed that trade. Damn. Always loved Jesse. And Jesse's very similar to all you got Da Vinci followers, right? Just basically buying when they're crying. That's an old expression that I got from Dennis Gartman. And I know it's so funny about Dennis Gartman's fallen on the outs. I mean, as an industry newsletter writer, he actually used to write the newsletter that all the brokerage houses would subscribe to, and the brokers would read every single morning to figure out what's going on in the world. And that was one of his famous lines was buying when they're crying, selling when they're yelling. So it's kind of funny. I know they say that it's sort of the I don't know how the saying goes, it's a high form of a compliment when people copy your expressions and your sayings and stuff. But I know definitely Jesse learned this from me because I used to always say this to him, selling when you're Janet Yellen. Yeah, you remember those days? But if anything, like Nanny Nibbles, Jesse's really, really good at this sort of Nanny Nibbles, little old lady kind of strategy. He just likes to accumulate, and he's really good at his fundamental analysis, trying to figure out, what value is for these things. So hats off to Jesse. He's basically doing what he said he's going to do. Love it. Love that about him. This guy's going to be very, very, very wealthy down the road. He's such a young guy. And I actually think he's underappreciated in this space. I'm not quite sure why. But anytime Jesse's out there, I definitely think he's worth listening to. And of course, remember, guys, nobody's going to be right 100% of the time. It just isn't going to happen. Are you going to have clunkers? Yeah, you are. It's just the way that it goes. Yeah, Jesse Coach. He's hilarious. And I've known Jesse now for, a good 5 years or so in the crypto space. Let's see. Bull Bear battle lines. Yeah, so I was kind of worried, and really I've been watching this range for a while. And what's really interesting about this is this setup it cleanly set up bull bear battle lines, but it was really interesting because the market symmetry said get ready for serious chop and get ready for a megaphone. And ironically enough, that's exactly what's happened. So if we actually look at that chart now, we can see that, where is it? I think it's this one. We can see there is that market symmetry study, and I don't know whether you guys can see it. Maybe I'll make it a little bigger, right? And the market symmetry study actually said, get ready for fuck you, fuck you, fuck you, fuck you. And if we actually look at what actually happened, excuse my French again, sorry, YouTube. Are there any miners that appear in this video? Absolutely not. And miners, I'm sorry, you're not really, this video isn't for you. But what's really interesting about this was there was the inside bar bull bear battle lines, and FU moved to the downside, then back up, then FU moved to the upside, then back down. And we're still parked in this goddamn range. I mean, this is painful, but it's Chop Vegas. And like I said, those bearish bots and stuff off of OKCoin, they're alive now. Obviously, there's no guarantees in this space. The setup is sitting there. But as it stands right now, I mean, the irony of it all is if we change this to like a line chart, nothing's happening here. Market's just gone dormant. It's fascinating. So lots of head fakes. And head fakes, if anything, are an excellent hallmark to that Chop Vegas type market state. Really, really good analogy of what happens in Chop Vegas is people get chopped up. Yeah. And they always say never short a dull market. So that's sort of the one thing that sort of that I'm leery about getting too aggressive on the short side is that this market has gone completely comatose. Fascinating, really. Okay, so let's keep moving this train forward. Where were we? Where is that YouTube? Oh, I guess that's what this was. All right. Humphrey Hawkins, middle of the week. As an economist and anybody who works in the stock market, literally every single twice a year, we basically, everything stops in the stock market and everybody listens to Humphrey Hawkins. I don't know whether you crypto people would be that interested in this kind of stuff, but on the site we have lots of stock traders and futures traders and commodity traders and forex traders. So this is a pretty big event for us. So if you're wondering why on earth he's tweeting this stuff out, well, this is actually a pretty big event. The message that I heard out of him was basically we're data dependent. We're not really in a big hurry. We would still like to see inflation a little bit higher. The economy's cooled down a little bit from our aggressive raising of interest rates. And the interesting thing is that, I've told you this before, I really like to actually listen to market-based proxies tell me what to expect. And really, market-based proxies are giving almost exactly the same message. So if I watch the interest rates very closely. It's interesting to watch the long end of the curve is moving up, and I put out a tweet later on in the week, basically tweeting this chart out, saying, I don't give financial advice because, frankly, you're supposed to be a licensed advisor to do that, which means you just basically pay a bunch of bureaucrats and they make you write an exam. And then if you pass the exam, then legally they're not liable if you fuck somebody up. I mean, that's literally what regulated markets are all about. But long and short of it here is we don't give specific advice to anybody on the site. But I did say to the public, I said, look, if there's one thing I'm going to advise the world to do, it's pay off all your short-term silly debts. Now things like mortgages on houses, that's okay. As long as you don't really, you've got some equity in the house, right? It's not just pure interest that you're paying, no principal. But, things like credit card debt, get rid of that crap now while you can, because it sure looks to me like we just went through a window where interest rates came down, and it sure looks to me like we're transitioning into an environment where interest rates are heading back up on the long end of the curve. Now, the interesting thing is on the short end of the curve, if we look at the corporate the corporate debt market, rates are actually falling. Now, what this means is that the Fed doesn't need to be worried about like the credit market seizing up in the short term. And so as a result, they don't need to be as aggressive raising rates. But here's the thing. We need to keep in the back of our mind what the single most accurate predictor of recessions is. Does anybody know what the single most accurate predictor? How about you YouTubers? I know all you guys in the lounge, if you're students, you know this, but I wonder if Yo-Yo, do you know what the single most accurate predictor of recession is? And how, on average, how much does the stock market usually fall through recessions? So you can't be serious 03 says the trannies. Not quite. I guess what you're thinking about is like the Dow transport relationship. Okay, GUI says bonds. Boo ha ho ho 007 says bond market. You're getting closer. Hello, Peter Sachs nailed it. The yield curve. And on average, about how often? Well, not how often, about how much does the stock market fall during recessions? It's usually a good 50%. So, that's why we have to be pretty damn cognizant of the yield curve. So what the hell's the yield curve doing? And the great part about it is we have tools on the site in our library if people want to use them. A U.S. dynamic yield curve from the good people at stockcharts.com. And oh boy, this is getting awfully flat. And the thing is, right, is that the long rates are moving up now. So that's good. Maybe the curve starts to steepen. But like notice, during Junior Bush's reign, right, there's where the curve went inverted, meaning short rates are higher than long rates. And of course, look what happened afterward. And then during the dot-com days, and actually right there, you can see it says inverted. That's like 2 years or greater than 30 years. And of course, the .com blow up there. So we have to be super cognizant watching this yield curve. So as it stands right now, are we getting ready for recession? No, not there. But look at the difference between, say, like here, after the recession and in the recovery, Fed takes interest rates right to zero, right? And is there any sign of recession here? Not a hope in hell, right? And so the market keeps moving up. Yield curve still happy, but notice as we're getting further and further into this economic cycle, notice how the yield curve is flattening, right? And now we're in a state where, gee whiz, this is getting really flat. It hasn't inverted yet, and like we said, it looks like we're okay for now. The short-term interest rates are on pause. The euro-dollar market's relatively happy, so everything's okay. This euro-dollar market starts to roll over and start raising, then that means the Fed's got to get back to work and raise rates again. So, interest rate report right now, I think are okay. But no doubt about it, you can see these are the yields. And anytime we see W's, which direction should we expect, Colleen, for this market to go? You see a W, does that mean the market's going to go up or down? Long, right? And you can see the W's are coming in across the board here. So interest rates are on the rise. Doesn't necessarily mean we're heading into recession because the yield curve looks relatively okay right now. It's not inverted. But the cost of borrowing looks like it's going to go up here, people. So get ready for that. Anyway, so that was a very long-winded talk about Mr. Fed. As I sort of said, the battle line's getting super tight. And of course, I'm already starting to hint to the public that, hey, look, if these things break down in here, this can get ugly really quickly. So just be aware of that, Bitcoin enthusiasts. We're not out of the woods. We're not in an upward trending market. In fact, I like to have this study. I actually follow all of the major commodities based on just sort of what the trend models are suggesting. And unfortunately, when you look at crypto, yes, we got lots of short-term uppy. Things are looking good. But I see a heck of a lot more red on my screen than I see green. Right? I mean, these moving average relationships, everything here is still basically down. Now, it's nice to see we're getting perk ups in this. I don't know whether this Tron has been out long enough for actually us to even really do a reasonable study off of this. You can see it flashed, it turned to bull, but geez, it looks like it's a little bit heavy again. But things like stellar lumens, I mean, geez, this thing looks, all of them. Bitcoin Cash, is anybody, and I don't even know whether we use this BCH or BSV or ABC or whatever anymore. But, Bitcoin, Ripple, Ethereum, Litecoin is really trying desperately to reverse. And really, this should make sense because Litecoin has its halving event coming up. And the last cycle, 2014, 2015, Litecoin actually enjoyed a pretty nice rally into its halving event. Not into, ahead of its halving event. Kind of like how Ethereum rallied ahead of that Constantinople event and then broke a few days ahead of the Constantinople event. And then now sort of the dust is settling following the fundamental event. Exact same thing happened in Litecoin through its halving event. And in fact, there was a guy in China who was running a Ponzi scheme on Litecoin, and he bid it up to absolutely ridiculous levels ahead of that halving event. So it would make sense if there was going to be anybody in the space that's going to sort of lead us out of the poop here. Aside from, Constantinople, fundamental events and things like Ethereum, I would actually be expecting Litecoin to actually lead the charge here. So, when we were sort of looking at Litecoin through the week, I was a little discouraged, as a sort of our leading indicator in the space. I was a little discouraged to see that Litecoin's gone and put in very well-defined M top up here. So that doesn't bode well, right? And if anything, what this suggests to me is we need to calm down a little bit here. Now, if we're lucky, I'm wrong. Go and bust this top, and the bull can continue.
But for now, this thing looks very heavy, for lack of a better term. Okay, so let's keep moving forward here. All right, so and actually, it was interesting. On this initial, like I had sort of said earlier, we had a potential bearish spot, but it didn't quite hit that 33. So I don't know whether we could call that valid, but it was very interesting to see on this sort of Ming out here. We had very well-defined M's come in on our momentum oscillators, and price did dump. And I was even kind of like, can we get a Davo boisterous laugh out of Davo on his Davo signal? And I think he responded only in like real time. Yeah, I said, here, can we get a hearty laugh out of Davo on this? And he's like, sure, but it's better live, which is adorable. Just change the name of your little old lady strategy, please, Davo. Make it something your own, please. I know when, oh yeah. So through the week, we had lots of fun talk. This Androgen was putting out interesting comments about the volatility index. You know, our conversation about yield curve and how it's flattening out, that sort of anecdotal evidence that we're coming to the end of this cycle. Here's yet another sort of anecdotal piece of information. And you level oneers, we introduced this to you, the VIX index as, you know, so your sentiment indicators. And we're starting to get sort of anecdotal similarities of how the VIX is acting in the last financial asset crisis. So it's really interesting to see, you know, they say history doesn't repeat itself, but it often rhymes. And of course, Humphrey Hawkins is a 2-day event, 1 day in front of the Senate, next day in front of the House. So that kept going on. It was really interesting in the stock market itself, the semiconductors, and of course, you know, stocks like Nvidia, AMD are directly tied to sort of crypto story. You know, really interesting anecdote about the stock market sort of running out of gas up top here, right at another one of our line in the sand levels, 78.6, right against the trend line. Nasty divergences, really stupid. All I'm waiting for is just give me some sort of M to work with here. And actually, I might even go buy a put on the stocks. So be ready for it, people. I feel a correction coming. Oh, here's that commentary about the rare earths. These rare earth stocks are just going absolutely crazy. And of course, Russia has about 80-90% of the rare earth market. So they're just loving it. So it doesn't surprise me, actually, that we saw the Russian ruble turn around and start heading up. And we also saw things like the South African rand start to turn up because the platinum and palladium and rare earths markets are just going crazy right now. Of course, lots of political funness down in the States. I suppose we don't need to comment about that today. Look at this North American palladium. This is the only sort of real proxy that us North Americans have locally for sort of a blue chip rare earth platinum palladium play. And as you can see, it's enjoying a bit of a bull market right now. Ay caramba. Obviously, don't chase that shit. Now, the interesting thing on this side is that while the rare earths are going absolutely crazy, no, do not FOMO that shit. So you can't be serious. Just said the one thing I tell you not to do. You missed the bull this round. Just be patient. Wait for the next buzz. Or you could always take a look at some of those junior venture cap companies like that one that I was telling you that's in the cobalt industry. But even that little stock has almost doubled here. I'm actually getting really close to selling half on a double there. So, yeah, I wouldn't chase any of those, to be honest with you. Well, thank you. You can't be serious. I appreciate that. But what was really interesting about this is that gold, as kind of sort of the ultimate sort of fear asset in the fear asset cycle, was actually flashing a lot of really nasty warning signs here. Something that's just not right here. Of course, had a very big run. There's Colleen's 50% rule, which happens to line up nicely with a trend line. Also notice, too, there's a cheeky little gap right down here, which is probably like Mountain Man 61.8. And actually, the level oneers just learned this. Colleen, can you now see this trade setup? Can you now see how we have this divergence all coming in here, Willie stupid, and lo and behold, what is that candle pattern? Right? B Silver Tree can see it, right? This is actually what's called an empire. I guess I can't zoom in on this. But in essence, very, very bearish signal. No, it's actually a very big empire. It's just this is a really zoomed out image. This is going back all the way to last summer. If I load that chart up here, you should probably be able to see it a little closer. But not off of this screen. It'll have to be off of this screen. There it is. So can you see that? Dun 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 dun. Brian's brutal singing. Anyway, the point of the matter here is there's the empire. Boom, boom, boom. And that's actually a sell signal right there. And it's a very difficult sell signal for new people to trading to take. Because what it means, you got to sell here and you got to have your stop all the way up here. And as a result, it's just too much risk, too much uncertainty for a lot of new people to even consider taking that trade. But it's one hell of a powerful formation, whatever you want to call it. And probably if we drill down in here, we probably should see a little bit of a head and shoulders. Let's see if we see that. Yeah, you don't really see it very well, but the head and shoulders would look something like. And actually, it's interesting how there's an M right up at the very top there, right? See that, Colleen? But the head and shoulders, and it's not a pretty one. I'm not going to sugarcoat that. But something like that. Boom, boom, boom. All the way up here. Boom, boom. Right. And then finally the fail down through here. Wherever the hell that level is. So I'm not going to, it didn't paint the prettiest setup here. But in essence, that higher time frame, that would be sort of that fractally type image. I mean, to be perfectly honest with you, the trade is right there, that big old. Here's such a great example, Colleen. If you ever see the market doing what, run for the hills. Isn't that incredible? You ever see the market smiling at you? Just get out. Run away, run away. And you know what? You know what was even worse? And I think I have it right here. Look at the silver. And you got to remember these silver guys. These guys are just notorious crooks. Geez, you think the crypto market's bad? Take a trip to the silver pits and the COMEX. And hopefully everybody can see. This is now off of the daily, right? Higher time frame. Hopefully everybody can see that. Nasty. Ouch. Yuck. So it sure feels like the silver bull has run into a little bit of a brick wall here. And really, what was fascinating is over the past month or two, I kept sitting here going, I can't believe this gold market just keeps going higher and higher and higher and higher. And now it feels like at least now they're starting to clean this market up a bit. So, if you are a gold bug, where are you looking for support? Clearly horizontal support and resistance are those levels there. Good old 38.2. We call that our first stop target. So my hunch is there's probably going to be some sort of fight down in this area here. And if I actually wanted to be a buyer, I got to let this whole thing settle down. And it might set up a bot setup. You just never know. Right, so the bot would be 33%. So we're coming into that level. 66 is all the way down here. So ideally, what we really want to see, if we're thinking trend continuation, And really, we want to see the market come down, just settle down, put in 3 higher lows, right? Maybe set up nicely off of something like that. If it can't hold this 38.2 and it actually has to dip all the way down into reload zones, then what that probably means, kind of like Bitcoin, what we saw, is that we're still stuck in a trading range. So I think that really, I mean, I can't, it's kind of pointless, making predictions of what actually is going to happen, right? Crystal balls and all that kind of stuff. What I would say, though, is, I got lots of anecdotal evidence to support the idea of the market coming back down here. The market will do whatever the hell it damn well does. And if we can't hold this 38.2 or, between, say, 38.2 and 50% and start consolidating, then the bot comes off the table and we go back into sort of trading range kind of conversations, where I'd be looking for, if this is a trading range, one of the site setups that we work is what's called El Tangonator, and it looks for a dip into like sort of trading ranges, nice W's, and then we'd be doing, just like I showed you earlier, 50% rolls off of that range. So I have no idea what the future holds here, but that's scenario 1, sort of come down into reload zone, fill in gaps against key lows, put in some structure, and your trade is basically going along here, looking for that as a target, and you're going to risk that window there, right? And that should be better than 2 to 1. If we're botting, then consolidation above 66, no less than 33. W pattern, 3 higher lows, try and get long off of that, and then we're playing AB equals CDs heading up top. Considering that the Fed kind of thinks that interest rates are, interest rates have gone high enough, they're on hold. Considering the econs coming out recently have been pretty bad. Considering that, Europe, there's actually word in Canada that Canada's slipping into recession. Obviously what's going on in China, there doesn't seem to be any sort of resolution to all that just yet. These things usually, they actually gain a head of steam, and then it actually becomes really hard to stop this stuff. So put it all together, I wouldn't be surprised if we start sinking into deeper and deeper and deeper economic problems. ECB's coming out and saying that they're going to flood the market with more bonds, quantitative easing, all that. That's not an environment that's bullish of gold, right? If anything, that's all deflationary talk. So doesn't surprise me to see the gold finally coming down to earth here. All right, let's keep moving this forward. Top Step, my old prop firm. Always like to listen to what they have. This was just a quick sound bite, nothing really of any value there, but I think it's always a good idea if you do want to sort of learn what a professional trader, day trader's life is like, just to simply pop over to Top Step, introduce yourself to Eddie, introduce yourself to Hogue, introduce yourself to Nebraska, and just they have a whole bunch of free content that you can just sit and listen and just get an idea of what pit traders' lives are all about. I would highly recommend anybody, if they really did want to go the prop trading route, to talk to these guys at Top Step. They're very professional. Ouch. Let's see what happened here. Yeah, okay. So there was that sort of Davo trade resolution. Market did dump, and then it quickly snapped back. So go figure. Oh, great. More political stuff out of the United States. Bombshells being dropped right, left, and center. Quite remarkable. It was interesting through the week. I didn't really hear too much talk in North America about what's going on in Pakistan and India. Keep in mind, both of these countries have nuclear weapons now. If this thing deteriorates fast, this could turn into just an all-out ugly shooting match. So I don't know what's going to happen there, but I did find it really fascinating that very few people here in North America are talking about what's going on there. It's interesting. I love this guy. If you want a good sort of very cold, very in your face, very real conversation about how you should act, especially in crypto. This not so fast guy, I think he's just the shit. He's so awesome. So I think everybody should be following him. You can see a lot of people like him. He's a pretty smart guy. I love the fact that our TRI community, we all sort of work together to try and help us be better traders. And of course, Bitterx is having lots of fun with us with their open orders and all their order management systems and stuff. But I just love the fact that our community members all work together to help each other. It just fills my heart. It's so awesome. Yeah, and this guy I also really like. He's taken a lot of shit recently. Over his sort of bottom calls and top calls and stuff like that, but also very, very smart individual. What scares the hell out of me is these damn robots that they're building. In fact, we were joking about one at Riz's place last night that I tweeted out a while ago. Really funny voiceovers and stuff like that. But I got to tell you, man, these things are getting scary, right? Like you look at this silly robot. I mean, look at this. These things are coming to get you, right? And they have no conscience. They have no emotion. They're just going to do whatever they're told to do, which scares the hell out of you, So anyway, even Hawkins, before he dies, he said, the thing we humans have to worry about are these damn robots. There's more conversation about the bond market turning and yields turning up. Pay off your debts. There's what's this guy here? Oh, that's a tweet about that empire actually firing. And that's the one thing that I like to do with you guys in the Twitter feed and YouTube and all that is I like to actually show you step by step by step as these trades develop. So, subscribe to the Twitter feed because basically I walk you through how all this stuff works. In fact, I had somebody yesterday say that this Twitter feed is like worth gold unto itself, which I was amused about. Here's comments about the Constantinople event. And now I kind of thought maybe it'd be a good idea to let that event play itself out, buy the rumor, sell the news. And sadly, I hate to say it, guys, I think that's exactly what's happened here with Ethereum. In essence, which one is it? I think it's this one. That Constantinople event was, I think, who can correct me here? I don't know whether it's right here or whether it's right here. But in essence, this is the event window. It was this one, lots of chop, leave it alone, right? You could argue, through that event horizon, set up a top end of the range, bottom end of the range. You can see how we bounce back and forth, and now we're losing that range. And now we're making lower highs and lower lows. We haven't made a lower low here yet. But if we punch down through these lows, then, it looks to me like the bear is in control here. So, this to me definitely looks like a sell the news event. So, sort of as I was sort of saying on this tweet, probably best through that event to just let everything sort of settle down. And I even put, cheeky tweets out that the poor kids are just getting run over by the pros on things like BitMEX right now. This is classic Viva Chop Vegas, right? And guys like Arthur over there on BitMEX, he's just loving this. Just get everybody long, stop them out. Get everybody short, stop them out. Get everybody long, stop them out. Get everybody short, stop them out. Back and forth, back and forth, back and forth. Very tough market right now. And if anything, what I would suggest to the entire community, while we're going through Chop Vegas, just cool your jets. You want to, if you're an advanced trader, you want to build a trading plan to trade, lower time frame setups, great. Live by the sword, die by the sword. You know what you're getting into. Joe's six-pack public, you want to do your nanny nibble strategy and just slowly accumulate positions and names that you like. Very, very low, small percentage of your stake. And you want to maybe do those nanny nibbles over the course of a period of, say, 6 months or something. where you're throwing in very small percentages. You know Brian's rule: don't ever let any one position represent more than 5% of your stake. It's just not worth it, right? Because there are going to be duds. There are going to be coins that delist and just disappear. Get used to it, especially in crypto. Get used to it. That's part of the game. But through this sort of kind of Jesse Couch, as the market's crying, as we're going through Chop Vegas, if you just want to slowly accumulate good quality names, good structure, good fundamental story, I love that idea. But the irony of it all is that's really boring investing. And so as a result, a lot of people don't really get that excited by that, and it's tough to sell, memberships and subscriptions and stuff. But the point here is I'm not here to shill memberships and subscriptions. I just want to give you the straight goods here. So, more U.S. politics, and keep in mind, Canadian politics is no different. In Canada right now, we have a horrible scandal going on with SNC-Lavalin, which is an engineering firm, and the Attorney General in Canada basically said she was under intense pressure by the Liberal government here in Canada not to prosecute SNC-Lavalin. So don't get me wrong. When I tweet about the shit that goes down in Canada or in the States, I'm not saying Canada's any better. Everybody should understand this. And let's see if anybody watching, because there's like 60, 70 people there on YouTube. Let's see if anybody can finish this expression. This is how I think of every single politician that is alive on the planet today. How do you tell that a politician is lying to you? Can anybody on YouTube finish that question? Can answer that question? I know all you guys in the lounge, you know the answer because I say it on a daily basis. Very good. You can't be serious. That's right. I don't trust any politician. Any and all politicians are out to line their own nests. They're out to service their own special interest groups. And they will do whatever they have to do to make sure that whatever pet projects they're interested in get funded and get approved. And it doesn't matter what country you're in. It's just in the West, at least, the politicians don't actually have you executed if you disagree with them. Although there are some politicians in the States that might actually like that idea. I was joking at our dinner last night. Mexico right now is going through a massive amount of elections, and something like 43 different politicians that were running for office down in Mexico have been literally murdered over the past, and I don't know whether it's, the past few months or what, but that's how dangerous politics are. And the worst part about it, of course, is, we live here in Canada and we're really sheltered and we're really spoiled. So we end up, being loudmouth guys on YouTube about politicians. But in other parts of the world, I could literally be murdered for some of the things that I say about politicians. And it really wouldn't surprise me. So don't get me wrong. I mean, they all their shit stinks. It's just really a question of whose shit stinks the least. Just so sad. But again, sometimes I just don't understand how this damn world works. And, this tweet here, I really like this tweet because this tweet here speaks to Brian's going to tell you the truth. And I will actually, because this is a stock that I took a shot on. This is Tim Draper's stock that's in the provenance industry. I really like the fundamental story, but I bought the stock and I was going to sell half on a double and get myself into a risk-free trade. And at that point, it wouldn't matter what happened to the rest. And you can see how they popped it up here. They got it close to my level and then it just crapped right out. And then, based on my trading plan, I said I was going to buy against these lows. And if the market moves against me and we break these lows, I'm just going to walk away. And that's exactly what I did. So actually, this is a loss. This is a loser. Brian, you're a loser. You suck. And yet, I'm actually really proud of this tweet. This is the kind of stuff, and what I said here. How you actually handle your losers is actually going to be a much better tell as to whether you're going to make it as a trader, as an investor, versus how you handle your winners. Anybody can like roll the dice and be right and, hodl and all that kind of shit. But the question ultimately is usually what kills people in this game is they buy a position, it goes against them, and then they don't have the professionalism just to say, look, I was wrong. I better get out of here and limit my losses, or else this could turn into a really bad situation. So, ironically enough, I'm actually extremely proud of this trade and this tweet, even though probably most of the people that looked at this, you can see no likes, not really many comments. Probably most of this, in fact, I wouldn't even be surprised when I tweeted this out. I probably lost a bunch of followers because of this tweet. But the long and short of it here is this. I'm actually very proud of this kind of comment on Twitter, telling you the truth. Just what are the facts? Facts are, I lost money. Simple as that. Facts are, I followed my trading plan, which actually I'm very proud of. Probably more comment on these damn platinum and palladium stocks. This thing just fucking kept going. I mean, it's ridiculous. Drive you nuts. And hopefully, I don't know, Colleen, can you see the W's down here that would have got us long? And then if you did like a fib off of this high back to these lows, reload zone tags and all that kind of crap. Right? So you can't say that you couldn't have gotten into this thing. The problem is nobody was interested in this thing when it was a buy. And look at this. Ay, caramba. Drive you crazy. Anyway, just rhetoric, really. Really interesting to see that people are starting to talk about sort of unrelated third-party metrics are starting to suggest that maybe we're getting close to a bottom. I don't know whether we can just go off of this action that we're seeing on this metric and call a bottom, because you can see this thing was Wing its way along here, but we actually had to make lower lows. So I don't know whether this is enough to say that the bottom is in, but it's encouraging, right? And like I sort of said here, I think my response here was, I think we're closer to the bottom than we are the top. And day by day, we're getting closer and closer. And, I'm feeling pretty good about this. But it's just further anecdotal evidence that the crypto winter is starting to thaw. Have we actually seen the rivers start flowing and the plants start blooming yet? I don't think so, but we're definitely, I think we're closer to the bottom than we are the top, and this kind of anecdotal evidence is the kind of thing I want to see. Oh, poor old Quadriga. And what's shocking about this Quadriga is it's turning out that the government already sort of knew about this guy. So now the government actually has an excuse. They can say, well, it was a new industry and we wanted to give you guys your space and just fill yourself out. Now that we have a precedent of how bad these are, now we're just going to come in and shit on your guys' heads. Yeah, really, really bad commentary, sad commentary. And then, I even saw videos this morning. This poor little guy, he said he lost like $400,000 just having it sitting in Quadriga. Ay. Poor guy. I feel for you people. And I know, like, I had an account there. Thank heavens I didn't lose any money. But I have friends. At least I think he's a friend of mine. I'm not sure. Last night I asked him if he was, and I didn't get the best response. Inside joke. But anyway, he got a little bit hurt on this exchange. I feel for you guys. This sucks. And if anything, it's an embarrassment because I'm always touting about how good we Canadians are, how polite we are, and all that. When really, it's a load of horse shit. We're all humans, right? And there are crooks everywhere. You can't, just like you can't be right in the marketplace 100% of the time. You might as well just accept that. Well, I can absolutely guarantee you there will always be a statistical part of the population, no matter where you live, that are they're just assholes. And the irony of it all is that we went through exactly the same thing in Canada about 30 years ago with Briex. It's remarkable. Now, I love this because, in essence, this is applying the bot trade metrics to your actual trades. Like, remember, we were shooting for a 50% tag off of this empire on the gold. And according to the bot trade metric, you want to get short, basically where the empire fired. And now we had the move stop to scratch level. All right, take it easy, bearded nerf herder. Casey, you take it easy. Have yourself an awesome afternoon. And actually, what time is it? Oh, it's around noon. Yeah, so I'll wind this up in maybe about the next 10, 15 minutes. So feeling pretty good about this gold short idea. Worst case scenario, it comes back to the bot entry level. You just walk at scratch, next bus in 10 minutes. And in essence, it was the right thing to do. So that empire actually was extremely powerful. Great trade. Fantastic trade. There's that comment about interest rates. I'm telling you guys, always play from a position of strength. I find it interesting that there's an old, I think it's Hebrew. I might be mistaken, but I think it's Hebrew. An old Hebrew saying that goes, neither a debtor nor a lender be. And after my wife passed away, I sort of completely lost direction in life. Didn't know what to do. And I sort of let go and just put myself in God's hands and just said, do with me as you please. And, half of the reason why I'm talking to all 67 of you right now is because of their goal. This is what they want me doing. So, but after she passed, I just said, look, I have to play from a position of strength. And I literally reset everything. I don't have any debt, no debt. I use credit cards, but they're paid off at the end of the month. I have a relatively respectable account balance. No mortgage. I lease a car. They can have the car back any day they want. But no debt. No debt, no debt, no debt. And I got to tell you, since I've lived that life sure becomes a heck of a lot easier. So I'm really worried about sort of our generation. Well, not our generation, the millennial generation. It's really sad how our society has set them up for failure right out of the gate with hundreds of thousands of dollars in student loan debt that, the fuckers have even built into the system that no matter how poor you get, you can't declare bankruptcy and forget about the debt. We actually built into the system, over the past 40, 50 years, it was actually really healthy that if the society got too indebted, that you could literally declare bankruptcy and the courts would just reset you. Yeah, nobody's going to lend you money. But in essence, you just start from scratch. And now our society, for some reason, has decided, and of course it's like the Joey Diamonds of the world, the fuckers, has just decided that, no, you're not allowed to ever hit that reset button. It doesn't matter. Fuck you. Which is setting up this next generation for failure. So, if you can somehow just try and pay off those debts, just get it out of there. Right. And the sad thing is I think, and this is just purely Brian's opinion, but I think the sort of 2020 sort of transition, Jupiter, Saturn cross, all that, this is supposed to be a big pivot for humanity anyway. I got a funny feeling this is going to be shock and awe. It's going to be startling how brutal this reset is going to be in our society. So just try and make sure to pay off your debts, people. One of our OGers from way back when, sort of reiterating the same message that sure looks to me like we're awfully close to a bottom on Bitcoin. I have seen, and I remember doing Coinigy shows and all those kind of things. We can get these bull divs and, Willie Stupid and everything all set up internally that this market is very strong. And you still see sort of choppy, soft price action. So just because we're seeing all these internals looking pretty sexy, that doesn't mean we're going to go straight up. But this internally is saying that, this asset is actually a lot stronger than what price is leading you to believe. And I was very, pleased, very proud that it was one of our OGers that actually put these kind of tweets out. This guy actually is part of a firm. Two of our OGers went off and formed their own firm. And I think they've done really well. I wouldn't mind actually getting together with those guys again and just doing sort of a reunion YouTube show or something, just to see what they're doing and how their business is going. But very, very smart gentleman. This is our aristocrat, right? Everybody on the site knows him. I love telling his story. He's got such a great story. So hats off to you, Jonathan. I think he's a very, very smart individual. So, like I said, nice read, sir. Let's see what we got here. Yeah, the gold market just broke. So basically, that was just a follow-up of what happened. Boom. And that's the sad thing, right? Is now all the people that bought all the way up here, now they're underwater, especially in the silver market. Oh boy, silver is so dangerous. But all these people are underwater now, and they're just desperate. They're just going, please, 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 somehow bring the market back up top here, please, please. It's a very dangerous position to be in, and it's such a good lesson that we just shouldn't chase. Don't chase, don't chase, don't chase. Hunt those W's. There's good old Quadriga. Terrible. Really good lesson in you think crypto's manipulated? Oh boy. Let's go over and have a conversation about the derivatives market. I don't think a lot of people in the public really understand this, but the long and short of it here, these are put options. They basically give the purchaser the right to sell this asset at a given price for a given period of time. And if Wall Street, the people who generally write the put options, but 90% of all puts are written by Wall Street sort of institutions, whales, all that. If they can get the market up above certain levels, then all these insurance policies, we'll call them that, they all expire worthless, right? And really on balance, most of the people that buy puts, they don't want the insurance policy to do well. Do you want to have to collect on your car insurance? No, because that means you got into a car accident. Do you want to have to collect on your house insurance? No, because that means your house burnt down. Do you want to collect on your life insurance? No, because that means somebody died. So on balance, most of the people that buy these are okay with them expiring worthless, but it just goes to show how blatant this is. And you can clearly see that if Wall Street can get the market above this white line here, all of these, and 20,000, 8,000, 17,000, 11,000, 30,000, 20,000, 31,000, 27,000 contracts. And remember, the multiplier is times 100 times whatever the average price is that these things were written at. We're probably talking maybe about a good $100 million in insurance premiums just right there. And if they can get the market to close above this sort of 280 level, look at what they're on the hook for. 2,000, 3,000, 400, 1,200, 700, 1,000, 10, 16. I mean, I hope you guys can see what's going on here. So, gee whiz, what a coincidence. Heading into Friday, they gapped the market above that level, and then they played with it, and then into the close, they made damn sure the market closed right nicely above that level. Cha-fucking-ching. And it just keeps happening month after month after month. It doesn't change. It's remarkable how telegraphed this is. And, of course, every Thursday we have the Julian report, and he basically outlines these levels and what we call the option pins and what levels we should expect the S&P to go out on Friday, and basically nailed it. It's totally perfect. It's quite remarkable, really. Shocking how blatant it is. I was actually really pleased to see this. In Canada, we have retirement savings deadlines where, if you make a contribution to your retirement plan, the government will give you a tax credit, and it has to be done by a certain date, and that date was March 1st. So it was actually really great to see that we're starting to get, all these people have made these RSP contributions. All right, sitting in cash. Now what the hell do I do with them in my registered plans? So we got a bunch of people on the site that were like, hey, can we get together and talk stock? And we have sort of a RRSP, that's what it's called in Canada. A bunch of them are Americans too, though, so same sort of logic. But we had a really great meeting. I think it was on Friday. And we went through a whole bunch of names, and this one really jumped out at me. XBIO, Zenic Biosciences. Oh, what the hell is that? I'll let you do your own due diligence on this, but the story is actually very interesting. Heavy insider in ownership, not many shares out, and very rarely do you ever get like a FinViz recommendation rating of 1.0, which is the highest rating. It's like 1 is a strong buy, 5 is a sell. Very rarely do you ever see ones. So, and if you dig into the story, I really like the story. So, yeah, everything looks ripe on this thing. So I'm probably just going to go buy some on the open on tomorrow. But I'll also work some stink bids down below to add to the position. But man, I really, really like that stock. So, but I know a lot of crypto audience probably not too jazzed about it. But I think we came out of the meeting with a list of about 4 or 5 stocks that look really, really cool. A couple drone names. We were talking about Dr. Pippa and Macro Voices. Dr. Pippa owns a drone company. One of the drone stocks we were looking at is in the agricultural business, which I thought was so cool. So there's a bunch of really, really interesting stocks that I'm very interested in right now. So that was a comment to that. And I really like the idea that TRI, a lot of people obviously come to TRI because of crypto, but the stuff that we're teaching is applicable across any market, right? Technical analysis really should work on any asset that's trading that's relatively liquid. And of course, fundamentals. We teach a bunch of fundamental screening modules in the course from the stock market that I learned years and years ago, and they work really well. So really pleased to see that the community is branching off because let's face it, I mean, maybe crypto just sits and goes sideways for the next year or two. You don't know. I mean, the worst part about it is I remember a year or so ago trying to tell people that I thought that, crypto was doing a very similar behavior to how the last fear cycle ended and its respective sort of asset preference proxy through that fear cycle, and how I thought there was a lot of similarities with crypto. And what's shocking is I can't believe how actually incredibly accurate that sort of, what do you call it? Theory, postulation, whatever, has actually turned out to be. I mean, it's almost shocking how similar these moves are. So, I do think it's a good idea if you are a trader, and actually on the site, we like to, he's a very abrasive guy, and of course he's selling his product, so keep that in mind. But I like to play this video and show people this video. I mean, he's not your best friend, that's for sure. He's probably stunningly wealthy. That wouldn't surprise me. I think he runs his own prop firm. But he nailed it when he actually described what a trader's life is all about. And that somebody came to him and he said, well, Anthony, I'd like to trade with you. I'm a Euro trader. And he's going, well, that's kind of stupid. And of course the guy's like, well, you just called me stupid, right? But he actually said so I do yourself a favor and watch this video because I think it's really well done. But he basically said, look, if you want to be a professional trader, what you have to understand is you're trading volatility. That's what you're really trading. So, and a lot of people are like, well, I'm long only, especially if you're like a position trader. So that means you have to be hunting for whatever market is most volatile and is in a bull market and weekly W's and all that kind of crazy talk that Brian gives you. So, I mean, if Bitcoin's just sort of sitting here down in the bottom of the range, just bouncing around, and there's not a heck of a lot of volatility, then saying, well, I'm a Bitcoin trader, well, you're basically limiting yourself and your activity. You can be an enthusiast and you can be an investor in those assets, but don't expect to make a trading living off of that. And so, that sort of speaks to, I was showing you those silly platinum palladium stocks. I mean, that's the hot part of the market right now. And, crazy things like the electric vehicle business and that silly Blink, right? Doubling, tripling, quadrupling, all that. And, these guys here, they're basically going to steal market share from a monopoly. They've got basically a complete monopoly on an industry, and these guys are going to come in and just try and compete a little bit in that space. And the monopoly that the company has, their patents are expiring. So in essence, get ready. The whole space is going to start seeing competition. So it makes sense to me that, I have to be flexible as a trader. I have to follow the volatility. Where are the W's? Where are the good fundamental stories? And where is the action? So anyway, really, and it doesn't surprise me one bit that when I put out a comment like this, even though, the irony of it all is there's people that charge like $500 a month for fluffy newsletters that actually don't give them specific ideas for them to actually go and research and see the fundamental value of these ideas. This is for free. And yet the irony of it all is that nobody on Twitter is even the slightest bit interested. I think the only likes that I got were from like a couple like OGers at TRI that even understand how stunningly valuable this information is. It's incredible. But anyway, this is the way it is. You get it for free. Merry Christmas. And now you're probably going to value it by how much you actually had to pay for this information. All right. And on that note, we're done. Oh, geez. I think that was a good couple hours. All right. You just promoted more to hit the like button, Brian. Yeah. See, and I'm terrible at that stuff, right? There's, and actually that's not bad. There's 25 likes on this video here with 65 people watching. And of course, there's that one obligatory downvote. And I know exactly who that is. Which is hilarious. But anyway, it is what it is. All right. So that's basically my offering. Good couple hours. I hope you enjoyed it. I hope you learned something from this. Colleen, I hope I answered your questions. And helped you with those extension levels. And actually, I've even given you a little bit of a roadmap of what I'm expecting if Bitcoin breaks down. We've given you a nice little parking garage to look for. The person who was asking about using the trade metric tool, I hope I answered that. And of course, went through the whole Twitter feed. So now you are all officially up to date. So I think the only thing left for good old Brian to say is a big bye for now.